Arif Malik. By profession, he is a well-known insurance agent. His charismatic ways of dealing with his clients is quite the talk of the town. Today on this set, his guest of honor is Mr. Tariq Shafi, who is a renowned CPA in the Washington metro area. I like the way that this CPA says cash is king. He further elaborates on planning life from birth to death. Anyway, back to the two gentlemen with planning on retirement and investments.
Hi everybody, this is Arif Malik with Financial Finish with a new episode. And today we are going to talk about retirement planning, investment planning, education planning, plannings of different kinds for oneself. And my guest today is Mr. Tariq Shafi, the CPA. One more time, welcome, Mr. Tariq.
So it was a pleasure to be with you, Arif.
Thank you so much. I hope you enjoyed the last one.
Oh, we certainly did, yeah.
Good. And are we ready for another one today? Today I thought we will be talking about something like planning for other people. People do think about planning, but they fail to plan. And my advice to them is see a professional, see a CPA, guide you the best way to do it. And so I got Mr. Tariq Shafi here today, so we could be talking about it, because people normally say that maybe you're trying to sell something. We don't sell anything, but we sell everything. That's planning for you, all right? So Mr. Tariq, let's start with retirement planning.
Okay.
How do I retire, and how do I put my money in retirements?
Well, I guess the first item to mention is that if you are an employee, you are directly contributing to your retirement in the form of Social Security.
Okay.
So when you are, say, 62, 65, 69, 70, you can start withdrawing the Social Security that you have paid into the system as part of your retirement planning.
Okay.
That just goes a little ways. And
little ways.
Last time we did talk about retirement planning as something, as a base, rather than being your total. Your main tax or retirement planning vehicle.
Okay, all right.
But of course, if you are an employee, as you're working, your employer may sponsor some 401k plans or 403, depending on whether it's a government, private employer, hospitals, whoever. And in order for them to attract you to come and work for them, assuming that you are such a wonderful employee, it's very competitive out there, they will offer these additional fringe benefits, and it's a win-win-win situation for everybody.
Oh, really?
Because the employers will sponsor you. They will probably also fund, say, $1 for every dollar that you contribute, or 50 cents to the dollar that you contribute. And so it's something that accrues over a period of years and into an investment vehicle of his choice, the corporation's choice. But you have a say in how the mix of your investments would be.
Okay, so whether you want to put it in aggressive or semi-aggressive or conservative vehicle.
Exactly.
That's your call. But their call is where they want to put it.
Yes, they will choose who the broker would be, the investment. And really it depends on your life cycle choices also. If you're young in your 20s, you may wish to be more aggressive than somebody in his 50s, for example, or in his early 60s, and the person may be thinking of retirement. So the person who is in his 20s would be perhaps more aggressive in his choice of investments, emerging markets, or aggressive newcomers into the stock market companies, whereas a person who is in her 60s, for example, would prefer to be more conservative. Conservation of principle becomes more and more obvious, and really that's what decides your life cycle choices, how much you wish to accumulate. You should have a plan from the very beginning, of course.
Fantastic. That's very good. That was something about retirement. And then people like to invest for their retirement also.
Correct.
Called investment planning.
Investment planning for your retirement.
How does that go?
Well, everyone has heard of the IRA. They stand for individual retirement accounts. And the government lets you, the federal government lets you put in your tax dollars into an investment vehicle of your choice. What the dollar values are depend on each year, and they are inflation adjusted. But it's a good thing. $5,000. It could be $6,000 if you're 50 years or over. And your accumulations accrue again tax deferred. And we talked about that last time.
We talked about.
We clarified what tax deferred means, but again, as a reminder, tax deferred means that your earnings are accumulating tax-free until such time as when you are ready to take these investments for retirement purposes.
Oh, that's great. And then you pay taxes according to that.
That's right.
And like we discussed last time, the best time to take it out is when you're retired, because then your tax bracket comes down.
That's right.
And then you pay less money.
That's right. But there are nuances. In other words, there are situations under the IRA accounts. There could be a Roth IRA or a regular IRA, and that all depends on before taxes and after taxes. And sometimes, like in a Roth IRA, you don't pay taxes when you withdraw funds because these are after-tax dollars that you've invested in.
Fantastic. I think that would be the best route to go for me, at least. I mean, I'm pretty ignorant about all these things.
Well, you're an expert in your field, so I defer to you on those ideas.
Thank you so much. Thank you so much. And then there's another planning we can do is for our beneficiaries, our loved ones we leave behind. How do we do that? For example, if I'm not there, the main income goes down. The wife, the kids, I want them still to stay in the house.
Correct.
And what do we do for the mortgage or other payments? How do we pay for the bills? You know, they will not stop.
Yes. I mean, we take a very holistic view of retirement planning and so on. And you've asked a very specific question. For example, if you are the main breadwinner and you move on, how to protect your spouse and your children, especially your younger children.
Exactly.
Because they are still dependent on you. And I guess I would say that all these issues need to be confronted. People don't really like to talk about death and so on.
Unfortunately, very unfortunately.
But it's something that must be done. When you're young and busy and raring to go and clubbing and so on and so forth, you are not that pressed to talk about these issues that when you're otherwise would be when you're in middle age, for example, or more elderly. And for example, you asked a very specific question, paying off the mortgage and so on. Insurance, life insurance, for example, plays a major role in ensuring that you have the wherewithal to pay off your mortgage when you move on.
Yeah, that should become very handy.
That's right.
If you have extra cash.
Oh,
and that is tax-free.
Liquidity is key. Cash is king.
I know.
For the past 5, 7, 10 years.
And that is what I learned when I was doing car business. And the first lesson I learned in car business was cash is king. And I said, how does that come in? He said, the more cash people put in, the more sale we have.
That's right.
You know,
That's right.
But cash is king. I've heard that terminology.
Right.
Definitely.
You've heard also that, for example, bankers, lenders will only lend to those people who don't need the money. I mean, it's just a very ironic thing. You go to a banker to fund your operation, to fund your dream and your business, but they want to know what the collateral is, and home prices have gone down substantially, and
people are underwater.
That's right. A lot of them are underwater, and so the banker, for example, wants to know how much cash you have in the bank.
Okay, all right. So cash is the king.
I would say so.
Whichever business you are in.
Yeah.
Fantastic. But here in this part of the world, your credit is also
extremely important.
Very important. How good your credit is. You could have $1 million cash lying in your account.
That's right.
You go to buy a car, they will not give it to you.
No, absolutely. I remember when I first came to this country, I applied for a credit card, and they refused point blank because I didn't have a credit history. Exactly. Over time, you build it and so on, and then you can't keep them away because they just drown you in credit. And that's another item that we should mention because it's part of your financial investment planning to not take more and more debt and just pay for what you can afford. This country was built on credit, but at a personal level, you have to be careful that you don't take so much debt that you, again, as you mentioned the phrase, you're underwater.
Yeah, exactly. And especially when you're retiring, you should be debt-free.
Ideally.
I mean, that's the best planning.
Ideally, yes.
That the day you walk out of your job, you don't owe a penny to anybody.
That's right, that's right.
And you still have your credit established.
That's the ideal world, but utopia. But it doesn't happen, especially in the past decade or so. Things have become from bad to worse for a lot of Americans, and there is more and more of a need to see a financial planner, someone you trust, sit down with and lay out your goals and plans, and then let the analysis happen.
And that is where our people like Mr. Shafi, Tariq Shafi come in very handy. CPAs, professionals. Go to see a professional. I've always talked about it in all my programs. They are the best. Talk to the professional, seek their guidance, and once you go to them, don't keep anything to heart. Put everything on the table. Like you go to a doctor, they make you fill a form. You tell them everything what you have gone through in life, and then the doctor advises you. It's the same way you go to a CPA. You have to put your cards on the table. Don't hide anything from them, because tomorrow you will be blaming somebody else for your own fault. Tell them exactly what you have. Don't hide any assets or any liabilities from them. They will not be able to guide you properly.
Am I correct? That's very good. Absolutely right. Not only that, Arif, we have to monitor periodically.
Oh, really?
Make sure, because your investment, your financial goals change, life cycles, transitions, your children get married, your spouse goes out to work, who becomes the breadwinner, or marriages and, God forbid, deaths. These are all parts of life. So,
very true.
So the idea is not just to see a planner, financial planner, investment, tax planner, once a year maybe, but do it periodically, maybe several times a year. So you are keeping abreast of changing patterns and your environment.
Really? So you're trying to tell me is that every now and then you should review your situation with your planners.
Absolutely. And we make sure that with our clients that they know our doors are open, not just during the tax season, we are very busy then, but also throughout the year, so that they can come in and have appointments.
True.
And so it's a team effort.
Periodically you can guide them accordingly.
Yes, we must. Otherwise, we're not doing our job as you mentioned. And things change, as I said, and emergencies happen. And so these are items that a financial planner ought to know about very quickly.
Fantastic, fantastic. Any last words for our viewers you want to tell them now?
Start planning ASAP. At an earlier session with you, I said we plan from from birth to death. So it's a process. And again, a lot of people don't want to talk about death, but it happens. We all have to go, and so I don't want to leave our viewers in a sort of in a bad mood or anything like that.
True.
But it's a wonderful thing to plan at an earlier stage rather than a later stage.
Exactly. If you're planning anything, do it now.
Correct.
Don't leave it for tomorrow, because tomorrow never comes. That's what my belief is.
Sounds like a Bond movie.
Anyway, thank you very much, Mr. Tariq, for coming in our show.
All right.
And we will seek more advice from you.
Sure.
Anybody wants any help, the gentleman is right here.
Thank you. Appreciate that, Arif.
Pleasure.
It's time to proceed on over to the Financial Finesse. This will be hosted by a well-versed gentleman who is an insurance agent by the name of Mr. Arif Malik. Mr. Malik was a TV personality back in Pakistan. Here in the Financial Finesse, he's the host, and his guest of honor today is Mr. Tariq Shafi. Mr. Shafi is a well-known CPA in this region. His services are much talked about in town. Anyways, let's lend our ears to Mr. Malik and CPA Shafi in their dialogue.
Welcome to another episode of Financial Finesse. And I have one